Hi, this is Tod Wagner, tax practice leader at BMF, and I'd like to share with you today some thoughts as it relates to tax planning in the current environment. We've had a myriad of tax law changes, including an extension of the tax filing and tax payment deadlines. And in all of that activity, I wanted to share some things, particularly from a business perspective, that you should be paying attention to in this environment. First, as it relates to the filing and the payment deadlines, most of you know April 15th filing deadline was extended to July 15th, but any income tax return that was due after April 1st and before July 15th has been moved to July 15th. You should also be aware that that's not the last date that you have to file a return. You can still extend your returns as you otherwise would. And if you extend the returns, the new payment deadline is going to be whatever the normal extended due date. So in the example of an individual, the extended due date will be October 15th. And for a trust, it would be September 30th. All the payments for the 2019 tax year, though, are due on July 15th. The other significant July 15th date is estimated payments for calendar year taxpayers. Both the first and second quarter payments are due, and it's particularly important to consider what methodology you're going to use for estimated payments for 2020. Very often, we use 2019 as a benchmark for making 2020 estimates, and there's a safe harbor for many taxpayers relying on 2019. In light of the fact that many are going to have income that's significantly less this year or even losses, if you rely on 2019 as a methodology, you're going to end up overpaying. You can also use an annualized method, and be careful with this also. The annualized method may result in using a period where you had profits, say, for the first quarter. And if you annualize that, you can still end up overpaying taxes for 2020. Another method to consider is to look at what you think your actual 2020 liability is going to be and pay in 25% of that liability for each quarter. So you would owe half of the tax at July 15th for the first and second quarter. But be careful in using that method, as there's not much wiggle room when it comes to filing your ultimate 2020 tax returns if you've used that methodology. Next, I'd like to talk about net operating losses. Unfortunately, many businesses are experiencing losses in not just the current year, but perhaps if you had losses from an earlier year, there may be some advantage as it relates to some of the law changes in the CARES Act. The Tax Cuts and Jobs Act in 2017 eliminated the loss carryback provisions, and it also removed the limitation on ability to carry losses forward into the future. In the CARES Act, they allowed losses to be carried back 5 years for losses sustained in 2018, 2019, or 2020. Now, as I mentioned that, there's already a bill pending which may limit that to only 2018 losses, which can be carried back. So stay tuned for any future legislative updates. But it certainly is something to look into. And when planning for those loss carrybacks, though, make sure that you're taking into consideration the full benefit of the NOL deduction. By carrying back into an earlier tax year, you may be limiting the use of other tax attributes, whether it's a Section 199 deduction, or also known as the Domestic Production Activities deduction, or charitable contribution deductions. And those have limitations on how long they can be carried forward. So you want to consider, should you take those losses forward and use it to offset income in the future, or should you look to carry the losses back, keeping in mind that the total tax liability saved is, in many cases, more important than just the timing of the liability. Another thing that was corrected in the CARES Act as it relates to some changes in the 17 Tax Act, which were considered drafting error, was the ability to claim bonus depreciation deductions for what's considered qualified improvement property. That's property typically with a 15-year class life. And once again, as you plan for how to take advantage of that, you want to consider the benefit of those bonus depreciation deductions, particularly if they would otherwise be just accelerating or accentuating a net operating loss, and also taking into consideration the impact on different state and local tax liabilities, and the effort required to maintain those state and local tax differences, which often do not allow for bonus depreciation. But the IRS has released some guidance as it relates to the mechanics of how to take advantage of those depreciation deductions. And so I would encourage you to take that into consideration as something that you can do now to benefit from some of the law changes. Finally, I'd like to offer a few comments as it relates to the Paycheck Protection Program loans and the taxability of loans that are forgiven. When the law was first passed, there was a lot of rhetoric out of Washington about the loan forgiveness being tax-free. Well, the actual statute says that gross income from the loan forgiveness is not to be included in taxable income. The IRS, just about a week and a half ago, issued guidance indicating that as they read the statute, they believe that gross income constitutes tax-exempt income, and therefore expenses related to that income are not deductible. Of course, this effectively makes the loan forgiveness taxable and is contrary to the intent of Congress. Many in Congress were very upset by the IRS's guidance in that area, and already they have proposed changes in legislation that would overturn that. The most recent House bill, the $3 trillion stimulus package, included some language that would overturn it. And while there are a number of questions as to whether that House bill will ultimately pass, I would expect that before the end of this year that we'll see some additional legislation lining up everything with what Congress intended in the first place, and having this to be tax-free. I should also mention, don't be surprised if we also see additional rulings from Washington extending the July 15th date even further. I don't know whether that'll relate to payments, but perhaps to filings anyway. Thanks for your time today. I hope you and your families are healthy and safe, and please stay tuned for more from BMF as we learn of additional rulings and guidance and tax planning opportunities. Thank you.